Guys, and welcome to Zero Risk Forex. This is video number 5. The reason why this channel is called Zero Risk Forex, just in case this is your first time you're visiting this channel, is because every time we enter any market, our risk management strategy is based on this panel on the right hand side here. We ignore all this stuff in the middle, everything to do with indicators. All we focus on is the distance between any entry price and zero. So for example, this is the NAS 100 or the NASDAQ, the monthly chart for the last 10 years. So this is from now, today, 2024, going back to 1996. The price starts back here from zero. It's gone up all the way up to 20,042. That is the current price today at the end of market, at the end of close of market, which was Friday. Today is Sunday, the 3rd of November. That would have been 1st of November. That was the closing price. So basically, what is the NASDAQ? The NASDAQ is a bucket of 100 companies, which include Amazon, Microsoft, Nvidia, Google, well, basically top 100 companies. So when we are trading, we look for long setups. We are bull traders because our risk management strategy is based on calculating whatever price to zero. Now, as a bull trader, we can use zero as our floor price. If I decide to sell, right, and the market goes up, there's no ceiling price. It's infinity. I can't see a zero above that. But if I'm doing a buy trade on any market, I can see the zero, where zero is, and I can calculate how many points between whichever entry price I am at and zero. For example, if I'm trading this NASDAQ, what I would do is, if my entry price is 20,072, I would divide that by my account size, and whatever number I get is what I'll be trading per point. Because if I divide that entry price by my account size, if I'm trading at that figure, that means the only way I blow up my account is if that price suddenly drops from there all the way down to zero, right? Which hasn't happened since 1999. Okay, so we're trading on probabilities, right? What is the probability that the price of gold is suddenly going to go to zero? I don't think that's going to happen. So if I'm trading gold, what I would do is go to gold. The current price is 27,352 because you always calculate the first 5 digits. I would divide that by my account size. That would give me a figure, and that is how much I will be trading per point. All this stuff. So what I'm discussing so far has nothing to do with my entry criteria. Everything I'm talking about has everything to do with zero risk management. Here's a France 40. If I'm trading this, for example, current price is 73,891. If that's the current price, that is the exact distance between the current price and zero, 73,891 points. If I'm trading this, I will divide that number by my account size. That is how much I'll be trading per point. And it goes on with the USD JPY currently at 15190. It's the same principle. So anytime we are entering any market, we do long trades and we calculate our risk management on the distance between that entry price and zero. That is how we determine how much we trade in per point. Per point is different from lot sizes, right? If I do a division and it shows me 0.09, that means I should be trading 9p per point. If I take one lot size might not be equal to 9p per point. So the point I'm making here is you will have to figure out, depending on which broker you are using, to find out for each, how much you should be, or how many lot sizes you should be trading. So that your figure might be 0.5 lot size, it might be 0.2 lot size, it could be 5 lot sizes. My point is, based on the figure you get by dividing that by your account size, that is only telling you how much you should be trading per point. Based on that information is how you now go to your whatever broker you're using. You go and figure out how many lot sizes is equal to whatever number that gives you. With my broker, it's very easy because when I get my figure, when I go to trade, my broker by default shows you lot sizes and how much it is per point. Basically, that's what my broker does, which is FXAM. Okay, so that is to do with risk management, right? Now, the second thing we do is we use an indicator called the Williams R percentage to decide which markets to trade and when to enter those markets. Okay, if you go to the previous videos, I've spoken about how it works. Basically, this is a Williams R percentage below here, and I always tend to use the 6-hour chart, right? So above here, you've got the normal 6-hour chart for the last 60 days. And below here, you have the Williams R percentage indicator, which is basically two horizontal lines, squiggly lines going up and down. Anytime these are at the top over here, that means the asset is overbought. And if it's down here, it's oversold. Okay, so if it's down here, you're looking for buy entries. If it's up here, you're looking for sell entries. But we don't do sell entries. So we're always looking for the buy entries because, as I said, when I'm looking for a buy entry, right, when I'm doing that buy entry, I'm going to calculate my distance to 0. And that is how many lots I will use to enter this trade, which is a signal right here. Okay. Anytime the line goes down, it's going up, it touches that red line. I look up, if it's a green candle, I take that trade. Right? Last week, in last week's video, I was trading the NAS, and the price was there in the last week's video, that top red line. And that was where I made the video on that red candle there. During the week, it's gone up. I recovered and I've entered more trades, right? As it goes down, I always take more trades. So last week, our account balance over here had gone down to 302. This week, we've made a bit of progress. We're now on 315.75. Open positions, I've got 2 NAS positions. If you look down here, this was opened at 20298, which is slightly lower, which is this green line here, lower than where I entered in the previous video. So market went up, I closed, made a little bit of profit, it came back down, I've taken the trade again below my previous entry price. And then this second one over here was taken at 20078, which goes to here. When I got this signal over here, on this candle over here, I took a second trade at 20078. The price is 20072. So that explains why this one over here is about 5 points down. Another thing I did was I entered a France buy trade at 7399.79. Here we go to the France. It's just giving me an entry signal over here. Line went down, went up, touched there, looked up as a green candle, and I've taken that France trade. So these are the trades that we've got going into next week. And yeah, in my next video next week, we'll see how much progress. The other things I've done here is the Nakai I'm using to hedge. That's something I'm going to discuss in later videos. Something called hedging, right? So that if the market's going down against me, at least I'll be making some profit with my sell book, which is this Japan 225, which I'm selling, because naturally all these indices are correlated assets. So when they go up together. When they go down together. I've got two NAS buys. If the market's going up, I'm making profit. I'll be losing on these, but I'm heavily, much more higher on these, right? And if the market's going down, I'll make money from these. So that's basically hedging, right? Current account size is 315.75, up from our previous video, which was 302. So this week we have made, this past week we've made progress. In the last video we were there. This week, week number 5. So what I do is week 1, that was a balance. Week 2, this was the balance. Week 3, this was the balance. Week 4, what we took a 10% loss, which means the market went down. Don't forget, we don't close trades. So basically, market pulled back. We were there. This week, which is week number 5, it's made some progress back to there. And hopefully, week 6, by the time I make this time next week, when I'm making the video, would have made further progress. Okay. What this is we're trying to do a challenge. This is a 250 live account, which is this one. Right, this is a real account. You can see it connected. Trading is closed. Real. This is a real account. So we are using this real account to demonstrate our risk management strategy and our entry criteria. And what we're trying to do is use that both to grow these 250 accounts live on this channel 250 times. So 50, challenge 1, challenge 2, 250 times, however long that would take us, and that should bring our balance to 156k and above. Okay, so please subscribe to this channel and follow us on this journey. Every week we're going to be making videos, and every week we're going to be updating the balance. So this is week 1, 2, 3, 4, week 5, and whatever it is, week 6, 7, and so on. We'll be doing that here live on this channel. Okay. This is the account balance right now. These are the trades we're in, and yeah, we're looking forward to the new week. And then at the end of next week, I'll update another video. So I think I'm going to leave it there for today. Thanks for watching. Please subscribe and follow us on this journey. All right. Wishing you all a lovely week. Ciao.